And that's all I have for right now, which means that we can dive into the fun stuff with Mike. So once again, we're here with Mike Baker from EmpowerRD. Thank you very much for joining us, Mike. Please go ahead and introduce yourself.
No, not at all. Thank you for that introduction, Ali. Firstly, thank you to CFO Connect. Thank you for Spendesk to actually help put this together. Before we go into things, I'll do a quick intro as to who I am, just to explain why we're here, talking to you all today. So as it says at the bottom, my name's Mike Baker. I've been in the R&D tax industry for about 2.5 years, of which helped companies claim back over £20 million worth of funding. And I'm currently heading up business development at EmpowerRD. So EmpowerRD are a boutique R&D specialist company where we merge R&D advisors and a technology platform to help companies claim back R&D tax credits in the easiest fashion. But another huge part of what we do is to help educate companies like yourselves as to what R&D tax credits are and how best to actually leverage them. So great to see that we do have a nice mix of some people who've claimed before, such as yourself, Paul, and other people as well, where the R&D claims industry might be a new piece, but we're here to help guide you through that, as ultimately it is something which should be leveraged by a business if you are qualifying. And it's just a really, really good thing to actually take advantage of. One thing I will mention as well is really keen to try and make the session as interactive as possible. We do have Ali on hand to help answer any of your questions. So if you do have questions throughout, we do have some time at the end for Q&A. But rather than waiting for that, if you have questions, like Ali mentioned, we do have that question tab at the bottom. Fortunately, I can't see it, but put your questions in there and hopefully we can have those called out as we go through to try and make this just as fun as possible, whilst also giving you some key takeaways as well.
Great. Thank you, Mike.
Not a problem. In terms of what we'll look to cover today, as I mentioned, we've got quite a nice mix of some people who've claimed before, some people haven't. So we'll start by going into a little bit of detail about what R&D tax credits are, what you can include in your claim, what you can get back, how it's actually beneficial. And then for those of you who have claimed before, we'll talk about how the scheme has changed over recent years. The scheme was introduced back in around 2000, so it has changed considerably and is evolving every single year. From there, we'll go on to talk about how to get the most out of your claim. So we'll touch on this later, but claiming is something you can do every single year. But we're here to try and make sure you are getting back as much as you possibly can. You're taking full advantage of it. So we can give you some tips and tricks to try and make sure you are pushing your R&D claim as far as possible and getting your best help to do that. And how to actually, choose an R&D advisor. Each company will claim in a different way. You're going to choose something which situationally suits you, whether that's using a specialist provider like ourselves, whether that's doing it yourselves, whether it's helping out with your accountant. It could be a number of different ways. And we're just here to help direct you in the best fashion, as it were. Like I mentioned, we do have Q&A at the end, which I'll leave, say, 20, 15 minutes for. But if we can have questions coming through, obviously that's just a little bit more fun for everyone. So what are R&D tax credits? Before we actually get onto this, it's important to note that when looking at R&D tax credits is a way of getting money back into your business. However, it doesn't just mean it should be the only way. When we're looking at helping companies accelerate their growth pattern, we always recommend taking a slightly blended approach to funding. So whilst ourselves as a company only focus on R&D tax credits, because of where we are in the industry, we also work with a number of partners. We have ex-HMRC people in-house, and we always want to make sure that whether they're our clients or whether they're people like yourselves, which we're running these educational workshops for, but we're giving you the best advice out there. So other things you can use to help sort of accelerate your business growth is grants, whether that's sort of regional specific grants, whether that's Innovate UK grants. All of these things can be leveraged. And if you do want just a little bit more information about sort of different forms of government funding, we do have a number of articles, a number of docs we can sort of help send across to you. So if that is of interest, you will have my email address after this. So do feel free to ping me an email, book in a quick chat, and I can help sort of direct you down the best path. Similarly, there's some of the more common ways of sort of raising funds, whether that's debt financing, whether that's crowdfunding, or whether that's sort of raising investments via external sources. But the important thing to note is the R&D tax claim can be done every single year, and accessing any of these other forms of funding doesn't prohibit you from actually claiming it. The idea behind it is to help companies who are spending money on R&D. So as long as you're spending money on research and development, there's a way of claiming back a little bit of that every single year. And throughout this presentation, we'll aim to show you how best to do that.
So just to clarify, if I understood correctly, government grants, if you're receiving them, shouldn't impact your eligibility for R&D tax credits in any way. Is that correct?
If you're claiming grants, you can still claim R&D tax credits. There is a little bit of difference between the treatment of this. In terms of projects which are funded by grants, you can still claim R&D tax credits on it, but the amount you can receive back is a little bit less. That being said, it's still definitely worthwhile. Does that help answer your question there?
Yeah, that's perfect. Thank you.
Not a problem. So in terms of what the actual R&D tax credit scheme is, it was a scheme which was introduced in the UK by HMRC around 2000. And the idea behind it was to reward companies who are investing in innovative projects, which means if you're spending money on R&D, you can claim a portion back. And this can come back in two forms. If a company is loss-making, they can claim, which means that rather than having corporate tax relief, as the actual scheme suggests, it would come back as a cash credit. And similarly, firms which are profitable and spending money on R&D can receive the benefit as corporate tax relief. Similarly, if a company is sitting sort of slightly in the middle, so they have profits, but the actual expenditure on R&D is greater than their total profits, it would come back as a mixture between the two. So it could offset your company's taxation whilst also giving you access to a chunk of cash as well. In terms of the actual reason why this is implemented, it'll be the same in the UK as it will be in other countries. The reason behind it is every £1 which is invested in a country's economy is proven to create £2 elsewhere. In terms of the UK as well, we currently have a goal of creating the expenditure on R&D to 2.4% of GDP by 2027. Currently, we're around the 1.74 mark. So the idea behind it is to help incentivize companies to actually spend money on R&D by helping them receive back a portion of their costs every single year. So in terms of how this has changed over the years, currently there's about 83,000 companies who are currently claiming in the UK, and this number is increasing every single year. And we expect this to continue to increase. The reason being, it's beneficial to the UK economy. And with an average sort of claim value across all claims in the UK of £57,000, it's also sort of really beneficial to individual companies as well. I have heard a couple of sort of beeps as we've gone through there. I can't see the chat bot. Has anything come through there, Ali?
So we do have a really nice question from Paul. When offsetting prior year profits, does R&D tax credit rank above following year losses, or is that optional for the company? Is it a matter of timing?
It's optional for the company. So when you do your claim, you can either receive it as a cash credit or as sort of offset future taxation. Ultimately, when you're doing a claim, you'd usually do it in conjunction with an accountant or with a R&D specialist advisor, which can often sort of best advise you of what would be most beneficial for your business.
Great, thank you. Optional.
Were there any other questions, or was that it for this slide?
We have one from Amy. Is there either a minimum or maximum limit for how much you can claim?
There is no minimum limit. Similarly, there is no maximum. However, there has been a slight change, which I'll mention later on. There's more of a technical point. Typically, in my experience, I've seen companies claim back as little as about £5,000 a year, all the way through to companies claiming back sort of multiples of millions of pounds.
Okay, huge range.
Massive range. That's also why we have a section within this presentation about how best to choose an advisor, because how much you're claiming is dependent on sort of which way you'd look to claim. Typically, advisors are a little bit more expensive, so it would only be worthwhile actually utilizing one if you have a slightly larger claim. Similarly, for companies which are claiming back a little bit less, we'd recommend to do it themselves. And with so, there's a whole host of sort of documentation from HMRC to help them actually do that. But there is no maximum at the moment. There's also no minimum. It just depends how sort of financially viable it is for you at that minimum end.
Great. Thank you for that answer.
No worries at all. So how do you sort of qualify whether the work you're doing is actually eligible to be claimed? There are three sort of criteria here. The first one is, is there a high degree of uncertainty in what you're trying to achieve? So before you actually look at whether you are sort of eligible for the scheme, you need to look at what the company is doing and are they operating in an area of uncertainty. So if you are about to do something new, is there a set way of doing it already, which is known to the market, or are you trying to do something fundamentally new, which can't easily be replicated and does demonstrate creating a scientific or technological advance? Whilst this might sound like a lot of jargon, what it really means is, are you creating a new product? Are you creating a new service? Are you creating a new process? Or are you creating an appreciable improvement to something which is already out there? And is there no foregone way in which this can be done? So is there a recipe of saying, if I do this, then this will happen, then this will happen? If so, technically it can't be claimed under the scheme. What you need to be able to do is you need to be trying working out how to overcome that uncertainty in the first place, and how this uncertainty is sort of leveraging a new sort of product or service in this manner. The final criteria is that you're using experienced professionals to actually do this. So you're using people with relevant industry experience, with relevant qualifications. So as long as you can show that you're creating something fundamentally new, then you should be eligible to claim. An example we always use here to make this a little bit clearer is Just Eat and Deliveroo. So I'm sure these are two companies which everyone will be aware of, I think especially during the pandemic as well, where takeaways were rife. But both of them have created something which on the face of it appears very similar. They've both created a food delivery service and an app. However, there was no sort of foregone way which these apps needed to be created. There's no recipe of how to create a food delivery service or how to create a food delivery app. Both companies have come at it with their own angles. They've employed their own people. There's no set way of how to doing it. And ultimately, they've both created something new. So ultimately, both companies can claim. And the reality is both companies do claim. In terms of the scope of companies which can claim, it's not just limited to tech companies. We also see it very heavily in sort of manufacturing companies. So as long as you can fit those three criteria, then you are eligible to claim. In terms of the companies I've seen claiming with ourselves at Empowered, it's companies all the way through to companies like Bloom & Wild, who are a flower delivery service, through to a company which is creating sort of boutique caravans and creating new construction methods to do so. As long as you can hit those 3 criteria, there will be a way of claiming. And ultimately, there are always companies out there like ourselves who are there to sort of help talk through your projects, to help advise you on whether these individual projects can be classified as R&D or not.
Nice. So it sounds like any industry could be eligible for this type of credit. That's good news. Yeah. And we have another question from Paul. Is this also applicable for finding a different use market for an existing high-tech tool? It's a base machine learning algorithm that we are developing for another unrelated purpose than its original intentions. It's a good question.
That's a very, very good question. So what you'd be able to claim for would be the development of an algorithm. And if that algorithm does need to be sort of tailored to actually meet the demands of another industry, the actual time spent working out how that can be done and how it needs to be sort of merged or transformed, or what different people need to be utilized to make this happen, that portion of the work would be claimable. What wouldn't be would be the commercial aspects of that. So if you're sort of changing the market focus by marketing it towards different people or changing your efforts from a sales perspective, then that portion wouldn't be claimable. It's only the portion which is directly related to the sort of transformation of it which could be claimed.
Very clear. Thank you.
So now we've sort of gone through whether it's eligible or not. How do you actually do it? To actually create a claim report, which is the first step you need to do, you need to gather 2 fundamental pieces of information. The first one is the cost collection. And this is where I mentioned sort of gathering the costs which are directly related to the R&D and apportioning which portions are R&D versus which portions are sort of more commercial or marketing aspects which can't be claimed, and showing that these are the costs which companies incurred and these are ones which are eligible to be claimed. Sorry, got my words twisted there. The other part of the report then is the technical narrative. And the technical narrative is where you're describing to HMRC what the different projects are, what the different uncertainties are, what the challenges you faced are, just so you can sort of qualify why the costs are actually eligible in the first place. So this is a description of what the company's been doing, why it's eligible, and ultimately how much you're looking to claim for as well. Something important to note here as well, in terms of when you can claim every single year once your year-end accounts are finalized, and you can claim back for previous 2 financial periods. So although you can create that claim report in advance, that claim report cannot be submitted to HMRC until the year-end accounts are finalized. The other thing you'll have to do alongside sending this report is amending the tax computation document to actually reflect the change. And either this is something which sort of boutique specialists like ourselves can help you with, or you can do by your accountants. Once you have this claim report made and your year-end accounts are finalized, you can then submit the report to HMRC. HMRC will then review the claim to make sure that it is actually fitting into their guidelines for what R&D is, the costs you're claiming for are eligible, and this typically takes about 28 days. It does vary throughout the course of the year, so we typically see between sort of December to April. We normally see it taking slightly longer because we see quite a large amount of claims submitted around then due to companies aligning their sort of financial years around the calendar year or the tax year. Other times it's slightly quicker. Once HMRC have reviewed the claims, from there the money would be returned into your account, either in the form of corporate tax relief or cash credits. Is that all clear? Any questions at this point?
Not for me, and no one from the audience, so we can continue.
Perfect. So what can you include? So there's a number of costs which can be included in the claim. HMRC's definition is costs which can be directly related to R&D and wholly used up in the process. So the largest one is usually staff costs and salaries. And this is directly proportionate to people's time. So let's take the example from Paul there. So say you're creating an algorithm, say you have a developer who's writing some code, and he's paid £100,000 a year because he's very good at what he does. 90% of his time is spent working out this algorithm, creating codes, creating an app or platform, whatever it might be. And the other 10% of his time is spent on sort of routine day-to-day bug fixes and commercial activities. In that case, 90% of his salary, so £90,000, would be qualifying expenditure. And of that amount, you'd be able to receive back up to 33% of that. Similarly, you can claim for any subcontracted costs. However, this is capped at 65% being qualifying. Or you can claim for any sort of consumables. So this might be raw materials for, say, typically manufacturing processes, or it could be software costs, or it could be licensing costs. But the things to note here is outside of those core costs, there's a whole sphere of additional costs which can also be included. And this might be sort of support staff who are slightly more removed from the process. So say, for example, you've got a couple of your directors, you've got a couple of your management staff who are working out how the projects need to fit together, working out who needs to be sort of working where. Those people could be included. However, the proportion of their time might be slightly lower. Similarly, with companies which are growing rapidly, you might want to include sort of finance costs or HR costs if there's a portion of time which is spent working out, again, which resources need to be allocated where for the R&D activities, or making sure you're hiring the correct people for the scope of the work. However, what is an absolute no-go and will raise sort of large red flags with HMRC is the inclusion of any sort of commercial activities, be that sales, be that marketing, or any sort of more arm's length support staff. You need to be able to show that it's directly related to the R&D activity. So if it's time spent actually marketing the project or selling the product, then those costs can't be included.
Nice. And so if in your claim you're sticking mostly to those core and associated costs, and you're not, for example, including marketing and design in your claim, does HMRC typically give back the full amount of the claim, or how often do they do that?
Typically, yes. I can only really sort of talk to our statistics here. So in terms of our company, we've submitted about 1,800 claims. Across every single claim we've submitted, we've seen every single claim be successful. A lot of this, of course, is due to the fact that we have ex-HMRC people writing these claims and going through the costs. HMRC does have the right to inquire into claims, to part reduce claims, to reject claims. The actual inquiry rate is increasing at the moment. So I'll get onto this in a couple of the next slides. But HMRC is having a massively increased focus on going through the costs line by line to make sure that companies aren't including any of the costs which shouldn't be included. But if a company is only claiming for costs which are eligible to be claimed, then there's no reason why HMRC would come back and query those costs or reject or part reduce the claim.
Excellent, thank you. And let me know if you're planning to get to this topic later on in the presentation, but we do have a question from the audience about growing businesses, and that's who we typically talk to around here at CFO Connect, or businesses that are growing quickly or in hyper growth. So when a business grows from an SME into a large company, its R&D claim is then through the RDEC scheme, which results in a smaller eligible claim than if it were an SME. So the question is, are there any advantages of being a large company that can be utilized when claiming R&D tax credits?
Unfortunately not. So this is a point I was planning on getting to, but I'll go through now. So far I've mentioned that companies can claim back corporate tax relief or cash credits up to a third. That's true for the SME scheme. So to claim under the SME scheme, you need to have less than 500 employees, you need to have less than £100 million of turnover every year, and you need to have less than £86 million of gross assets in the company. If a company is beyond the scope, then they need to claim under what's known as the RDEC scheme or the RDEC scheme. The disadvantage of this is rather than being able to claim back up to a third of your total qualifying cost, you can only claim back 13%. It used to be 11%, and then it went up to 12%, and now it's gone up to 13%. So the benefit is that HMRC is constantly looking to evolve that scheme to make it more generous. However, in terms of where the vast majority of innovation and where R&D is arguably most sort of beneficial to the economy is primarily on the SME scheme, which is why that scheme is a little bit more generous than the RDEC scheme.
And so from your perspective, are there any advantages to being a large company that can be leveraged at this point, or is it just going to be potentially next year 14% that could be claimed back?
In terms of if you're a large company, obviously the benefits are the fact that you're a large company. The negatives are in terms of the R&D tax credit scheme, you can't claim back quite as much. And that is very sort of clear cut from HMRC. There aren't many ways around it. There are ways of better monitoring your claim. There are ways of being able to get earlier access to your claim, which can also be leveraged by the SME scheme. But in terms of the actual benefits of the two schemes, the SME scheme is much more generous than the RDEC scheme, and that's not something which is set to change in the near future.
Okay, thank you, very clear.
So going on to how the scheme has changed, this is something I mentioned earlier with HMRC taking a little bit more of an aggressive stance towards claims. So the last update from HMRC in terms of the actual R&D claims market was in 2021. And there's a couple of sort of key highlights here. So I believe it was Amy earlier who mentioned the question about whether there's a cap on claims. So currently there is no cap on how much a company can claim. However, there is a cap on how much companies can claim via subcontracted costs. And this was announced back in April 2021. And this was the introduction of what's known as the payee cap. And the idea behind it was to refocus sort of R&D on the UK innovation. And this capped out the total amount which a company can claim on subcontractors as 3 times the company's total internal payee plus £20,000 as the total amount a company would be able to claim via subcontractors. The reasoning behind this is I was noticing there was a couple of companies out there who might have 1 or 2 UK employees and a UK office. But then they'd have 20 to 30 subcontractors overseas, and that's where all the R&D was taking place. The idea behind introducing that cap on subcontractors was to refocus the R&D on the UK innovation rather than innovation from abroad. The other thing I mentioned is the scheme's not looking to go away anytime soon. As I mentioned, the UK does have a long-term goal of increasing the expenditure of R&D in terms of GDP up to 2.4%. So one of their most recent updates is the fact they're now including sort of cloud computing or data costs as costs which can be included within the scheme. And the government's also looking to invest an additional £20 billion in R&D by 2024, 2025. A portion of this will be sort of by increasing the amounts of different grants out there, but it'll also be by potentially making the R&D tax credit scheme more generous. So it might be that the RDEC scheme becomes a little bit more generous than that 13%, but so far that's slightly unclear. The other key things to mention here is around the increased scrutiny of claims. So the chief auditor at HMRC, a guy called Gareth Stockdale, previously noted that there was a slight discrepancy between the companies which were claiming, some of which were sort of bordering on the fraudulent side, the reason being the market is still slightly unregulated. So they're now looking at claims with increased scrutiny. So they used to have about 70 people at HMRC reviewing claims. That's now increased to 170, which means that as claims grow, they are going to be looked at in more detail, which does lead to a need to sort of tighten up claim quality, which is why we have sort of chats like this to help educate companies on what they should be including, what they shouldn't, and how to get the most out of their claims. So nicely leads on to actually how to get the most of your claim, how to get the most out of your claim. So as I mentioned earlier, you can only claim when your year-end accounts have been finalized. But that doesn't mean you should wait until your year-end account's been finalized to actually look at your R&D tax credit claim. The amount you can receive back is up to 1/3 of your R&D expenditure, so it's not an insignificant amount by any means. And what we'd recommend is tracking this throughout the course of the year. There's a couple of reasons for this. In terms of what you actually need to put into your claim, like I mentioned, the first part of the cost collection, if you can capture those costs as you go through the course of the year, it does just mean that you can make sure your claim is being fully optimized, can mean you're not missing out any sort of smaller invoices which might otherwise go by the wayside. Also means you can better forecast for your claim, you can better budget for your future claim return. And it also means when you're getting to your year-end accounts being done, it's not another task to actually add into the mix. If you can gather that information as it happens, it just means when the year-end comes around, it's going to be a much smoother and more streamlined fashion. But the most important thing to note here is the technical narrative. The technical narrative is where about 70% of inquiries happen. And a lot of the reason for this is if you're getting to your company's year end, you're then asking your tech teams to remember projects they worked on, in some cases up to 10 months, 11 months ago. I know personally, if I was asked what I was working on 10 months ago, I might be able to give you an idea of what those projects were, but I certainly wouldn't be able to tell you what challenges I was facing as I was going through that or what uncertainties I was coming across. So we do find a need to actually track this throughout the course of a year. It can lead to, well, firstly more back, but also much more robust claims as well.
Very good advice there. And we do have a couple of questions from the audience from a couple slides back. So in your example previously, do we have to prove the 90% of developer time, or is a reasonable view permitted?
So a reasonable view is permitted. The reason being, not every company out there is keeping timesheet data. I know of our clients, only about sort of 10, 20% do. So it needs to be justifiable, but you definitely don't need to be able to provide proof of where each employee is spending every minute, every hour of their time. Justifiable estimates are okay.
And with this increased scrutiny that you mentioned, are there any areas where you do have to provide proof of something in your claim, like very clearly?
So we'd always recommend companies keep sort of copies of the invoices they have. The reason being, you don't need to provide proof when you submit the claim. However, HMRC, like I mentioned before, does have the right to come back with questions or queries, which can lead to claims being part reduced or rejected in some cases. So if you are claiming for costs, make sure it's visible somewhere in the company to actually back it up, whether that's showing it in the company's payee, whether it's showing a copy of an invoice, whatever it might be. So if you're claiming for costs, make sure you're able to back it up. But no, you don't need to be able to provide proof when you actually submit the claim. You just need to be able to prove that if there is a question for it, you are able to justify that cost.
Great, thank you. Another question from Hans regarding the changes in the autumn 2021 budget. Is the relief also limited if parts of the R&D development is performed by a subsidiary abroad and the salary costs in these subsidiaries is recharged to the UK holding, which claims all R&D tax?
So in terms of subcontracted costs, if it's subcontracted costs which are occurring abroad, you can still claim for it, as long as you can prove that that cost has been expensed through the UK accounts. So I mentioned if it's recharged through the UK accounts, you would still be able to claim that cost. With subcontractor costs, though, rather than it being directly related to people's time. So we gave the example earlier about the developer who was spending 90% of his time on R&D. In the case of subcontractors, it's capped at 65% of the time, which means that only 65% of the subcontract costs could be included. And of this 65%, you'd be able to claim up to 33% of that back.
Good, excellent. Great question there.
Thank you, Hans. The other thing to mention is advanced funding. This isn't something which is often spoken about, but is something which is hugely beneficial. It's something we've seen quite a big emergence of over the past year, which is actually the benefit to lend against a company's R&D expenditure. So we have a number of sort of partners in this industry, a number of sort of funding companies will do this. They'll provide funding against a company's R&D claim. The reason behind this is it helps companies fast track projects, fast track product launches. Seeing as you can only claim once a company's year-end accounts have been finalized, getting early access to this might be really beneficial for your company as a way of sort of raising some non-dilutive funds. The other thing which is really interesting about this is the concept of the funding loop. So in terms of the companies we work with on the funding side, what we typically see is companies are usually able to advance about 80% of their expected claim value up to 6 months before their year end. So we take an example here of a company which has a expected claim of £200,000. Rather than waiting until their year end to actually get access to this, they'll be able to get access to 80% of it early, so £160,000. This money can then be reinvested in R&D to then increase the overall claim value at the company's year end. So if that £160,000 is reinvested directly into qualifying R&D spend and spent before the company's year-end accounts have been finalised, you'd be able to claim back on that additional £160,000, which would lead to an increased claim size of roughly a third of that, so an additional £40,000. So rather than having a claim size of £200,000 at the company's year-end, you'd be able to get access to £160,000 up to 6 months before the company's year end, and then the remainder, so the additional £40,000 and £40,000 from the initial claim pot would also come back to you. So you'd have an overall claim spend, an overall claim size, and you'd also have money early to help increase your cash runway or to sort of fast track any product or project launches you wanted to do. And again, this is just a nice sort of tip or trick which you can leverage. It does come with additional fees, of course, which is why quite a few companies don't take it, but it is something out there which can help you actually get the most out of your claim. Any questions about that, or am I okay to move on here?
You can continue.
Perfect. So in terms of who we are, like I mentioned, we work really closely with HMRC. So HMRC initially pulled out 4 companies, and these 4 companies were tasked with building up some industry best practice of how companies should be claiming and what to look for in an R&D advisor. The reason being, you get some R&D advisors which are much more aggressive, which they put in, which means they have a lot more inquiries and a lot more reductions from HMRC. You get other companies which are a lot more conservative in what they claim for. So whilst they'll have high success rates, it also means that they're potentially leaving quite a lot of costs on the table. So us, alongside 3 other firms, built up some industry advice of what companies should look for when choosing an R&D advisor. And there's 10 of these. The first one is make sure they're charging acceptable market rates. When I initially entered the market, the average sort of rate for helping a company to claim was about 15 to 20%. This has since gone down to an average of about 10%. But if you are using someone to actually help you create the claim and submit it to HMRC, we usually view an acceptable rate as 10% or less. More than that, we don't sort of deem as being justifiable. Similarly, we always recommend asking companies who they're using to actually create the claim on your behalf. whether it's actual ex-HMRC inspectors, whether it's actual tax professionals, or whether it's accountants. And don't get me wrong, accountants are incredible at what they do, and you have a lot of accountants who are R&D specialists as well. You do get the occasional accountants who don't have any specialization in the R&D tax credit space, yet will still try and do sort of R&D tax credits for companies and charge a premium for it. And this nicely leads on to the next point, which is about making sure that companies are able to provide references. Again, it's very much common sense here, but you'll be surprised how many companies don't do it. So when you're looking for an advisor, you are entrusting them a large amount of money. So make sure you are looking through Trustpilot reviews. Make sure that if you want to speak to a client of theirs, they're able to provide that. The other thing as well is in the midst of increased scrutiny from HMRC, we often see inquiry support being offered as standard, and we very much believe it should be. If a company is helping to create the claim for you, they should be the one who's actually backing up their work and being able to answer any questions from HMRC should they occur. Other questions which are important to ask is transparency about key metrics. So how many claims they've done, whether they've had any claims rejected, whether they've had any claim reduced. Another statistic which is more and more talked about, which is interesting to ask, is the amount of inquiries a company's had and what's their standard inquiry rate. The reason being, firstly, it's a sort of view on how many claims they've done in the first place, but it also shows you whether they are sort of leaning more on the aggressive side or not. I mentioned accountants earlier, but it's also really important for your R&D advisor is able to work alongside your accountants rather than against them. The accountants are specialists in your payroll data, in creating your year-end accounts, in providing your audit, or whatever it might be, and they're going to be involved in your R&D tax credit claim however you do it. But make sure the advisor you're using, and if you are using a specialist, is able to work alongside your accountant to best work for you to help gather that important cost information. A couple of final things to mention is the fact that the claim report is a self-assessment. So you need to be able to see a copy of what the company is going to be submitting, just so you're able to give that final tick off, but it is an accurate representation of what the company has been doing for the last 12 months. Final thing to mention then is multi-year contracts. We very much believe that if we do a good job, companies will come back to us anyway. We don't believe companies should be locked into multi-year contracts. A couple of reasons. The first one being the scheme is always changing. The market's always changing as well. So if 10% is an acceptable market rate now, it doesn't mean it'll be an acceptable market rate in the future. So make sure you're not locked in for any sort of multi-year contracts and you're actually reading through those terms and conditions before you begin. Any questions about those credibility indicators there?
We're all good. We can keep going.
Perfect. So we're now coming to the end. So let me just give you a brief introduction as to who Empowered are in a little bit more detail. So like I mentioned, we're here to help sort of companies learn what R&D tax credits are, how best to utilize them as they best can be utilized. But we do also help companies to claim. So what we do is we provide companies with an advisory team of ex-HMRC investigators, R&D specific accountants, technical writers, with a claims platform. And this platform firstly helps companies track their R&D expenditure throughout the course of a year, but it also creates a collaborative workspace where companies can work with their accountants and with ourselves to actually help companies claim in the most time-efficient manner, in the most what we believe, most cost-effective manner, and in the most transparent manner as well. There is a difference in the industry. Some companies are much more technology-led, and this works really well for companies who have a really good understanding of what R&D tax credits are. You also get companies which are much more services-led. So these companies typically do take a little bit longer to do claims, and it will be a lot more sort of back and forth. But if you prefer much more of that, having people come into your business to speak to each member of your team and interview different members, then maybe opt for that approach. Where we sit is between the two, so using a human touch to make sure you're getting back as much as possible, whilst also using a technology platform to make sure that you have all the information in front of you and you're able to get access to this throughout the course of the year. Final thing to mention as well is I mentioned the different companies which can claim, and this just gives a brief sort of introduction as to how widespread this industry is. So we've got Bloom & Wild, who are a flower delivery service, through to Vertical Aerospace, which is a company which is creating flying cars. If you haven't seen Vertical Aerospace before, would heavily recommend giving them a look. They've got some really cool videos out there. Also, Simba, it's a mattress company. All of these companies are doing significantly different things. All of them are claiming, and all of them are proving they're creating something fundamentally new and overcoming uncertainty as they do that. And that brings us to an end. I believe we've got a little bit of time left for Q&A, if there's any questions from anyone in the audience.
We do. We are rapidly running out of time, unfortunately. Thank you so much, Mike. That was very, very insightful. And we will do some Q&A from the audience. I would like to kick us off with a question for really small companies. How can they take advantage of this scheme? Do they need to self-file? Can you talk a little bit more about this case?
Yeah, of course. It depends what you're defining as a really small company. We'd recommend companies who are spending less than about £70,000 a year on R&D to actually go down a self-filing route. If you'd like to leave your email address in the comments, or if you'd like to just drop it to Ali or myself personally at this email address down here, we do have a number of guides about how to self-file, which talks you through step by step of what to do to create a claim report, what sort of things to include. And in this case, we'd recommend that to be the best route to go down. The reason being, every specialist company out there does have minimum fees. And the last thing you want to do is work with an advisor to create a claim and then realize that you're losing 70% of your claim to their fees.
And you mentioned that what is standard in the industry is really below 10% today.
Yes.
And so if you engage an expert, what percentage should you expect to pay them within that below 10% range?
It very much does depend. Personally, at Empowered, we charge 5%, which reduces for larger companies, but it very much does depend on the size of claims. Like I mentioned before, our largest clients are claiming back multiples of millions of pounds, so charging them 5% definitely does not make sense for anyone. Similarly, you'll see a few companies who charge a flat fee. And while on the face of it, it seems great having a flat fee because it's really transparent what you're going to pay at the end, we'd always say as well, this does lead to companies being a little bit more conservative because their interest is to put through a claim which is going to be successful and conservative rather than pushing it as far as it can be. The bottom line is if you're charged more than 10%, we'd view that as far too much. However, anywhere below that is the figure which us, Deloitte, Cooper Parry and Forrest Brown pulled together as what we believe to be an acceptable market rate.
Great. Thank you for that answer. We have one question from the audience. It's Paul again. How is the work split between company and advisor? I have found myself as a qualified accountant having to try to understand cutting edge science and populate spreadsheets with numbers without knowing exactly what HMRC are looking for. Good question, Paul.
It's a really good question. It's quite it's one I'll not struggle with, but it's one I come across constantly. The reason being, my opinion on this question is if you're using an advisor, it shouldn't be yourself who's struggling to work out which costs to include, what things to write about. That should very much be the advisor's job. It's the advisor's job to educate you on what R&D tax credits are. Ultimately, every advisor will need the same information from yourself in terms of how to claim, but the ways they're gathering that information is hugely different. So in terms of the cost pieces, you do get a couple of companies out there, us included, who can actually integrate with a couple of accounting softwares, which means that it shouldn't be your job to be filling out spreadsheets to try and work out what's qualifying and what's not. That's work which should sit with the advisor. Similarly, we believe if you are using advisor, you shouldn't be tasked with writing up a technical narrative. What you should be doing is you should be explaining to the advisor what you're doing and answering a couple of key questions in bullet point or a couple of lines, rather than doing all the work. Ultimately, if you're paying an advisor, it's their job to pull this together for you. What we do need from you is some raw information about what it is doing, what you are doing, and an overview of all of your costs. But it should be the R&D advisors to go through the costs line by line, to pull out what's qualifying, what's not. But it's a marriage between you knowing your company really well and the advisor knowing what HMRC is looking for really well, rather than trying to put the impetus on you to try and understand what HMRC is looking for.
Well, it sounds like Paul may want to book a meeting with you. And like I said earlier, we will send out the recording of this session and Mike's information in an email tomorrow. Thank you very much, Mike, for all of the insights and the advice that you've shared. It was a really, really great session. We had a lot of very excellent questions from the audience, and it was interactive. So thank you also to our audience for joining us, for asking those great questions. Hope it was helpful. I think it was. And please do join us at CFO Connect. If you're not already a member, you can go to cfoconnect.eu and join us. And we hope to see you soon. So have a nice evening. Thank you, everyone.
Thank you very much, Ali, and thank you to everyone else. So I wasn't just chatting to a blank screen.
Yeah, thank you, everyone. Bye-bye.
Have a good evening. Bye.